Good morning and welcome to yet another installation of the GIBS CEO Forum. I'm really excited today to be talking to somebody I've known for a very long time. It's always good to see people who leave what I call the secondary markets of financial services, particularly in the insurance and investment markets, to join the real world of manufacturing and solution provisioning, particularly in the really important sectors that Omnia operates in the sectors of agriculture, in the sectors of mining, and in the sectors of specialist chemicals. Now, oftentimes we don't take the time to kind of take a pause and reflect about some of the successes of the businesses that we are founded and are driven from our little country at the bottom of this beautiful but troubled continent of Africa. So Omnia was founded in 1953 as Omnia Boerendienste. And for those that don't quite do the taal, Boerendienste means farmer services it was founded by Dr. Joachim Winkler and Mr. Willem Maree with a princely sum of 53 pounds. Now, I just wanted to kind of reflect on that very princely sum of 53 pounds, not 5,300 or 53,000 or 53 anything, just 53 pounds. And it was largely a family business. And this is an organization with an amazing history of innovation. It was founded on roots of innovation. I understand there's something called trace elements, and maybe Seelan, you can talk a little bit about that. And these things were discovered barely 2 years before Omnia was established, which is 1951. And very few agricultural entities in the world were using these trace elements. And yet, Dr. Joachim, as well as Mr. Maree, found that they need to build their business at the cutting edge of innovation. So, Seelan, I thought we should start there before we get into the meat of the most recent past of Omnia, and just help us to understand, what does innovation mean at Omnia, particularly given this amazing history and this amazing foundation that you're built on?
Morris, good morning and good day to everybody, and thanks for having me. It's really a privilege to be able to speak to you today. I think Omnia is an absolutely fascinating business, and you've done such an incredible job to sketch the start of the business. The business, yes, was started by two founding members, a family type startup. And I think since the start date up until today, you can see a culture of entrepreneurship, a culture of innovation, a culture of getting things done. So, you're speaking specifically about our agriculture business. In our agriculture business, we have got a number of chemists, agronomists, laboratories, and people that are solely focused on ensuring nutrient efficiency, ensuring enhanced crop production. And in essence, what is so fascinating about that is we increase the yield of food production or crop production across the entire world. I can go into a lot of detail about how that innovation has developed over the years, but maybe just to give you a little snippet, we're able to take a crop that is 6 weeks old, test some of the sap from the leaf with our agronomists and our laboratories, and accurately predict the crunchiness of what the apple would be when the apple is harvested. That will allow us to create specialty fertilizer for our farmers. That will allow us to increase the quality, the yield of our farmers' production. Our people, and I think let's talk a little bit about customers. Our people are absolutely embedded with our customers in our agriculture and our mining business. So our agronomists live in the same cities. When I went out with our head of sales and marketing, Louis Stradum, to meet some of our farmers, often I would sit with the first, second, and third generation of farmer. Grandpa, the farmer himself, and his son, who is now a master's probably qualified at your fantastic school.
Absolutely.
And really taking the farm to completely the next level in terms of innovation. And that's our roots. That's where we started, and it's something to be proud of. I really believe businesses should build on their heritage, build on their roots, and clearly change and innovate to be relevant in today's world.
So, I mean, that's a great start. So talking about this innovation, help us to understand how you guys think about diversification, because in business, there's always this conundrum about, do you follow what Porter talks a focus strategy, or do you follow a diversified strategy? So 1987, you buy into bulk mining explosives. In 2003, you buy into Protea Chemicals. Those are the two huge transactions, obviously until recently in the later 2000s. But those two truly transformed you from being a primarily agricultural concern into being a diversified agriculture, mining, and chemicals business. For me, what is interesting is, one, how do you think about diversification, and two, what binds all of these three businesses together, or these three sectors together?
Brilliant. And I think we've had fascinating leaders in our business over the decades. So we can show a track record of almost 68 years of leaders in the Omnia family. And it's easy to look back and say, well, you could have done this or you could have done that. Let me just talk through the theory of why diversify why complement your agriculture business with the explosives business. So our agriculture business is really built on ammonium nitrate. So it's a source of nitrogen that is used in fertilizer, and we've got the largest and the most profound granulators in probably the southern hemisphere, and we produce premium quality fertilizer with those granulators. The nitrogen value chain, which is then used into agriculture, is a similar chain that is used to develop explosives. So, Maurice, ammonia nitrate, went very famous when we saw what happened in Beirut when things go incredibly wrong. And I'm sure we'll talk a little bit about safety in our business later. So I think our leaders at the time, which was correct, said, let's enhance and grow this value chain and this production facility to not only focus on agriculture, but use the same core competence that sits in the manufacturing capability for the fertilizer market. Let's use that into the explosives market. And that resulted in our BME business being bought and taking shape. And clearly today, when you look at our business, you see, roughly a third of our revenue coming from the explosives business. You see our explosives business not only in Africa, but in Australia, Indonesia, Canada, and the US. And I think a really, really good decision. The third part, and obviously agriculture's got a very long, deep cycle. So when you look at your balance sheet and your working capital, we prepare and manufacture fertilizer early in the year, which is what we do probably from March to about July, August, September. And then we supply into the rainy season, into SADC. So the business has got very deep cycles. And I guess the mining business a little bit neutralizes that cycle a little bit and allows the business to be a bit more consistent. And clearly the thinking around Protea Chemicals, which was then the next acquisition done, does exactly the same. It reduces the deep cycles of agriculture, complements the business. And all three businesses, as you can see, are there's a certain level of capability or core talent, core competence that can be shared across them. And that then led to the acquisition of BME and Protea. And clearly the Protea acquisition, if we go on from the date of acquiring it, was a difficult one. We see that our business battled to own and run and manage that business. And we see, volatility in earnings, and I'm talking over a decade now. So we can reflect on that and say, what do businesses need to think about before they diversify away from their core agriculture and then into mining and then into chemicals, specialty and bulk chemicals, and how do we build the muscle and the teams to actually now start running what is becoming a very diversified group. And as we move on, you'll see that it gets diversified further and diversified globally.
Absolutely. So this is a great story for me, for our students in the strategy field, but also our students in the international business field. But before we go back to those, let's talk to our students in the investment field. So you took 50 years to achieve a 1 billion rand market capitalization. That's up to 2003. Then you took 10 years to achieve a 10 billion rand market cap. But come 2018, the party stalled following what seems to be an unsustainable growth phase, funded by debt. And it seems to me that this new thing called debt in the world of Omnia was the Achilles heel. So before we go into the detail, help us to understand the capability set of Omnia as a bunch of engineers and a bunch of CAs running this organization. What debt capability did they have going into these acquisitions of Umongo, as well as of Oro, as well as the construction project of your nitrophosphate plant that was completed in 2019. Help us to understand the capability set around understanding the balance sheet management, if I can call it that, from using your banking language.
Thanks, Morris. Now, I think you've taken us to, you call it the party starts stalling. So, we have a very, very successful business. Expansion is going ahead, organic expansion on a number of fronts. And also we have a balance sheet that didn't have debt at the time. And I think if we reflect on that, I mentioned that we have these deep cycles of working capital. And I think the business made a decision to say, let's put some core debt on the balance sheet and let's go and expand. And, the investments made, as you said, we diversified a little bit further and went into a base oils and additives business, Umongo, a really great entrepreneurial team there. And also went into expanding further into the bioagri market, which is strategically makes sense. It's the future of agriculture and a growing sector of the fertilizer market. So that was Oro Agri. But I guess at the same time, we built a 1 billion rand nitrophosphate plant, and we continued our inorganic expansion. So we continued to invest in businesses across the world. Now what you've got is a chunk of debt coming on the balance sheet. And I guess forecasting, looking at headwinds, thinking about macro factors. And if you look at our business, our business is at that stage was a lot more dependent on rain. So if you had a drought, and maybe the drought is 1 in 10 years or 1 in 50 years, that would impact our returns. And if you had something go wrong, something stall or something being late, you need to make sure that your balance sheet can withstand that shock or that knock. And I guess what happened is, a little bit of the perfect storm, the rainy season, or there was a bit of a drought, so the agriculture business slowed down a little bit. Working capital increases a little bit, so management may be a little bit focused on all the new stuff, and we don't manage our core business tightly enough. Our focus on cash generation reduces. Our costs start going up because I guess we need to renew certain systems, and executives are busy. There's things happening across the world, and I guess where we land up, sadly, in 2019 is a large chunk of debt. A debt level that is unsustainable for our balance sheet. I think at that stage we had 6 billion of debt, a slump in the market cap where The market cap went down to as low as just under 2 billion, and a business in a little bit of crisis. And I'll pause there. So, you know,
so,
if you ask me,
let me stay in the theory a little bit. So modern portfolio theory tells us that you can't have the kind of balance sheet you had, let's say, in 2015, 2016, which is an ungeared balance sheet, because you actually don't get the best ROE returns out of that country. So you need the right mixture of debt and equity to drive the appropriate return on equity for your investors. But it's also good for other market disciplines, because you're communicating that if your strategy is good, you're not only relying on equity funding to fund your strategy, but you back your ability to have the disciplining effects of debt to kind of help you stay focused. So that's the theory, right? I really still want to just force you just to go a little deeper, help us to understand where does the theory and the practice disconnect? Because I think you guys did all the right things in the theory. The story lined up, even Oro and Umongo, they really line up. I love the green story in the agricultural space, but it doesn't kind of live up to expectations. So where do we miss it between what we teach in a business school and what you guys see on the ground?
Morris, if you will indulge me for a few minutes, if you don't mind, you know, so when we sit in investment banking, or we sit around the table with a corporate finance team, you know, everybody's looking at your weighted average cost of capital, you know, they're looking at your returns, and really you're tweaking those with 1 or 2 or 3 or 4 or 5% in all directions. Very theoretical. I guess if we put all of that aside for a second and just put it on a whiteboard and say, when we look at our business, is it worthwhile getting an extra 1 or 2 quarter percent return? And what risk are you taking to achieve that? And if you're able to manage and understand and quantify this risk, take the risk. If you can't quantify it, you can't manage it, and it brings in a high degree of uncertainty in a stable core, be very careful of doing that, because the price you're going to pay, and a number of businesses that do rights issues, you know, post a distressed balance sheet, the price the business pays is immense, you know, and very few. I mean, if we take the South African marketplace, you know, a number of companies that have done one rights issue end up needing to do a second, you know, and some even after doing a rights issue don't survive. So, you know, the price you pay for not being able to quantify and manage that risk might be more than you're prepared to digest or tolerate, you know. So I think, you know, even today, you know, you could look at our company and say, but Seelan, we, you know, take on more debt. You know, you're doing so well. You can take on, you know, 2 times EBITDA of debt. The question is, do you understand the macros, the headwinds, the risk, the cost, and the implication of things going wrong, and how you would manage that? So I think the theory is not wrong. You know, I think it's really the experience, the wisdom of saying, you know, if we step back for a second and look at the successes, and most schools, you know, teach us about the successes. We very seldom learn from the failures. And you know, one of the things I did with our board, which our board really enjoyed, was, you know, talk about a transaction that we didn't do. So a transaction came to us, we looked at it as the management team, and we said, no, we're not doing this. And I said, that's a great test case to understand why we're not doing it and why we don't want to digest that. So I think the theory is right. I think the practice and fully understanding the risk and the reward, and it sounds pretty basic. You know, you will tell me, but Seelan, investments is all about risk and reward. You know, understanding that really deeply and seeing not only the successes, seeing the failures, and understanding the impact of the failures is what's needed. And I would, you know, I really think we've got such great examples of successes, of companies going sideways, and of failures, that as a great emerging market economy, and you know, we've got such great executives because we schooled in such a difficult environment in these emerging markets. our executives are well placed to actually run these businesses and make these calls. But as you can see, they do sometimes go wrong. And it's what we do about it.
Talking about going wrong, I imagine it must have hurt for your name, this proud organization, to be named and to be associated with brands at the time like Steinhoff, Tongaat, and even another proud organization who's a client of yours, partner of yours, Sasol, that also went through some difficulties. And yet you guys chose the path of the rights issue where others weren't sure and others didn't go there. So help us to understand how, as a management team, you thought through your optionality and you diagnosed your particular problem, because what happened at Steinhoff and Tongaat and Sasol is very different to what happened to Omnia. But from an outsider, people just put you all on one bucket, So just help us to kind of sort out what Kahneman calls noise. How do you kind of sort out the noise so that you could get to the real issue, and that helped you to understand what options were available to you?
Yeah, I think, Morris, the decision making really starts, or the governance process really starts at the board level. So, when the board sat down and saw what the company faced, the Omnia board chose to take very, very decisive action. Made a few very, very difficult decisions and said, we want a sustainable company here. And I guess I found myself at that stage on the board as a non-exec director. And I think, listening and hearing and understanding the Omnia story, seeing that there's this strong heritage, a business that started in the 1950s with thousands of people, not only in South Africa, but across the world, a business that was really like a ship on the rocks. But this business had a fundamentally good purpose. It was involved in essential industries, in primary chemicals. It was out there to do good, create food production, economic livelihoods in mining. The board and the management said, we will take and make the necessary decisions to put this business on the right track. So, if I progress from there, we had to have a few changes. So the board thought about, well, maybe we need a few different thinkers to come into the business and assess it. And being a very strong family culture, a lot of folk were very proud about things at the group, and they needed to be proud about what the group has achieved, but certain things needed to change. And I guess we followed a fairly robust process to say, let's firstly put all the debt together, put in place a bridge loan, create a level of stability, cut out all the noise. So at that point, you're being criticized for everything. If you're doing a rights issue, you're being criticized. If you're not doing one, you're being criticized. Everybody's complaining, shouting, shareholders, banks, boards, staff, management. And I guess at that point, you need very, very clear thought. And, we cut out that noise. We said, let's sort the debt out in a structure that was safe, then do an analysis of the balance sheet and determine whether we could trade out, whether we could sell assets and move forward, or whether we needed a rights issue. And I guess when that work was completed with a lot of noise in the marketplace, we then announced a 2 billion rand rights issue. And I think what I'm particularly proud of is our rights issue was underwritten by our shareholders. And we were able to talk to our shareholders, explain to them what we would do, and they bought into those plans and underwrote a 2 billion rand rights issue at that stage at 20 rand a share.
So that speaks to the fundamentals of the business, because I've been through this notion of talking to shareholders around rights issues, around corporate restructure, and those are not easy conversations, but the fact that you got that kind of support really speaks to the strong fundamentals of the business. And I'm now going to maybe tap into some of the questions that we have, but I want to shift into a strategy conversation. You say your vision is to protect life, sustain livelihoods, and to create a better world, right? And so maybe if I were to check like using that as a basis, I'd like to tap into what is it Talib Sadiq is saying. So your current strategy, turnaround strategy, makes sense. It's focusing on current industries, but these are regarded as diminishing returns businesses in a medium to long-term perspective. So what investments from a strategic point of view are being made to achieve blue sky growth in less cyclical industries? I'm just going to stop there. He's got another dimension to this question, but it doesn't really build out anymore. But it's about going forward. You've got a great story in terms of staving off the bleeding, pushing out the threat, and you've been well rewarded for doing that. But how do you move your company from a PE of 14, 15 times to maybe 20 times, a forward PE of 20 times, so to speak, right? And how do you do that on a sustainable basis? I suppose that's what Talib is asking.
Yeah. So if we slow things down a little bit, our business is really in agriculture and mining. And, let's talk about agriculture. We know that population, and certainly in Africa, the population growth rate and the requirement for food will be there for a very long time. In fact, food security, even in a time of the pandemic that we've got, is really something critically important. So, I fundamentally believe that both that food production and mining, the extraction of minerals, will be with us for a long time. I don't think those are dying industries. If anything, I think they're growing industries. And I think if we think a little bit wider, perhaps in agriculture, the type of crops might change, so people might eat slightly different crops. And in mining, the mineral extraction might change. So maybe a move away from coal in the long term, if we take a 30, 50-year horizon. But the need for other minerals will always be there. So I think firstly, both our businesses, agriculture and mining, are businesses that I believe will be there for a long time. I guess the question Talib's asking is, what do we do in those sectors? And do we have innovative new technologies that we're taking into those sectors? And I'll talk maybe just about agriculture for a little bit. Our agriculture business has got various parts to it. We do granulized NPK type fertilizer, we do specialty fertilizers, and then we do bioagri or biological type fertilizers. So if I were to just talk and separate that a little bit, the agri-bio market, and that's our business in Australia, where we do humates, kelp, coatings products. We take those products into India, into Brazil, into the US, and into Europe. That's the fastest growing agriculture, call it fertilizer market in the world. That market's probably growing somewhere between 15 and 20% relative to a traditional NPK market that is growing probably somewhere between 2 and 5%. So I think when we look at our businesses, what you'll see is there are various businesses in it that are new, that are innovative, that are in faster growing markets, and that will be part of the future. If I go a step further into agriculture, yes, we do fertilizer, but we also do agri-tech. We've got incredible technologies around our laboratory. We've got our farms geo-mapped, where farmers know exactly where the tractor, where the produce is. We're able to analyze the soil down to the last square meter and actually provide the specialty chemicals that's needed for that. We've got probes, drones, and other technologies in the agri-tech space that actually ensure that we do not overwater. We do not put in more chemicals than are actually needed. So we actually do what's right for the environment. We do what's right from a cost perspective for the farmer, and we do exactly what's right from a yield perspective in terms of the output. And simply put, you would call that precision farming. So be more precise. And that technology side of our business, that's the value we add beyond just the fertilizer. And I guess, Morris, the question then is, as Omnia, do you have enough new technologies? Do you have enough new markets and new areas that you're going into, that you can actually monetize that and ensure that you're relevant in future years, 10, 15, 20 years. And I think what's so exciting is the strategy we took to our board in March this year actually started speaking not about a 5 and 10 year strategy, but started speaking about a 10 to 20 year strategy and saying, what are those capabilities? What are the people? And what are the areas we want to go into for the next 10, 20 years? And that is a muscle that I think a lot of businesses need to create, because innovation is not static. You know, the innovator of today is actually the dinosaur of tomorrow. Innovation needs to be a muscle that is continuously changing and improving in a business. And you actually, if I look at what our mining business is doing today, as an example, our mining business have got some of the best detonators in the market. So we can show you, you know, if you explode a piece of land, exactly what it would look like afterwards. And we can tell you that if it looks like a triangle, it will cost the mine X to take it away. And if it looks like a rectangle cake, it will cost the mine Y to take it away. You know, so the efficiency of your blast, the precision of your blast has a direct correlation on the mine's productivity and the mine's costing.
So you talk about precision mining, precision agriculture, and we'll get back to the question that has been posed by Keketso. But allow me maybe just to test some of the story in the narrative, please, Seelan. So in the agricultural space, Oro Agri was really an important, positive, forward-looking story. And in the short run, yes, you've been great. You've been rewarded for flipping it in 2 years and making a really substantial investment. I suppose on a like-for-like basis, it's equivalent to you've doubled the value in 2 years, because if you take the price point and the exchange rate effect, it's actually much more than the dollar price that you've received for it, right? But in the long run, Oro Agri was providing great tech for Omnia and was giving Omnia access into new growth markets. Help us to understand how, not in the finance space, but in the strategy space, how letting go of Oro has set you back, if at all, and the extent to which you have other opportunities of a similar nature that you will use with your windfall of cash and strong balance sheet that you have to kind of reset as part of your strategic renewal phase.
Brilliant. So let me just talk for a minute around what Oro did, and then I'll come back to the decision around how we made a decision to exit it. So Oro was a business that really used a source of orange oil, and it processed that and had some tech behind that, and it resulted in products that would make the fertilizer usage or the absorption a lot more effective. So that was a stimulant, a biostimulant. It was a natural product. And really what it would do is it would allow you to use a little less fertilizer, would allow the absorption to be better. So, you know, if we just think of the vaccines that are being rolled out now, we all looking for the highest efficacy. And really what the Oro product did is it made the fertilizer more effective and increased the efficacy. It allowed, and there was different versions of that. The first thing to state is there are other products that do that. So we have a UMake product in Australia that does exactly that. It's a biostimulant. We've taken that product. There are kelp products that do that. So you're able to get seaweed out of the ocean, process that, and it has it could have a similar effect in broad terms. So I think the first thing to note is that when we look at the biologicals market, there's various products that can achieve these outcomes. It's a highly fragmented market. So globally, this market has got a number of startups in the space. It's a market that has got certain barriers to entry where there's regulatory regimes across the world, but there's certain countries where the barriers to entry is fairly low. So a lot of startups across the world in this space, and to leverage a startup that has a unique product, eventually, Morris, what we see is distribution is the most important. So eventually, you want to take this product and actually distribute it across the entire world. So when we analyzed the market and the product of Oro, we fundamentally believed it's the right market, and we fundamentally believe we need a number of products in this stable, and we've got others. So, you know, our shareholders would have seen when we did our results presentation that our UMates business in Australia actually has higher margins than our Oro business. You know, it's growing fantastically, and it's a great asset that we maybe haven't spoken a lot about. So we looked at the businesses we own in that space. We looked at Oro that we bought, and we looked at other opportunities that we could grow and acquire in that space. And we weighed up the opportunity to sell Oro and the price we had on the table with all of the risks and opportunities around it. And I guess the decision made was that the price offered versus the opportunity of the upside in this asset was outweighed by the price offered. You know, maybe what that talks to, and I guess we should go back and think about the price paid, you know, and think, well, you know, if you had started Oro, you know, what would it have cost you? We paid 100 million US for Oro. And I guess to get a check of that size and obviously extinguish all of your debt at, you know, or extinguish your debt quite easily in a time, you know, also had us think about that. But I guess, you know, if in the long term, the price offered did not outweigh the value we could achieve in the long term, we would not have sold the asset. And clearly, you know, if you unpeel it further, the buyer of the asset, you know, why was the buyer prepared to pay what they did, and what is the buyer doing with the asset? It all stacked up. I'm hoping I'm answering the question. I would say, you know.
So you are helping us to have an understanding of that the new Omnia not only has a scientific understanding at the core in terms of its core competency, but it's also got a portfolio management capability where you don't fall in love with your product. You kind of logically assess opportunities, and you build up on a case-by-case basis. You flex your opportunity set, and you flex your optionality. And I think that's really an important thing, to get a better understanding about how that capability is developing within Omnia. And maybe to do that, if I could lean into another area that you spoke about earlier, which is this notion of, so you're speaking about product diversification, you were speaking about geographic diversification. Now, when I looked at even your most recent results, whether it's across agriculture, mining, or chemicals, South Africa still remains the predominant geography from a weight of revenue point of view. Other geographies are growing, as you say, at much faster rates than South Africa, and it's also reflected in our GDP growth rate. I would like to understand, on a through the cycle basis, on a 5-year view, on a 10-year view, what does the geographic portfolio of Omnia look like from a revenue and profit contribution perspective? Because that also helps us to have an understanding about the sustainable growth story of Omnia.
So I think, you know, understanding our income statement and balance sheet, it's important to note that a number of our inputs and our outputs are priced to the dollar. So, you know, when we think of geographic diversification, you know, you have got currency, you have got growth, you have got different risks and opportunities that play out in terms of these different geographies. And I think it is always a very heavily contested discussion at boards. You know, these South African companies that go into other territories, and you've seen the number of failures and retreats that have happened, you know, whether that be in West Africa or East Africa, but you've also seen the retreats that have happened in Australia and the UK and the US. So I think
especially in the US. Especially in the US. Yeah.
It's critically important to ensure that you have the core competency, the people, and the talent to actually take these businesses and expand them across the world. It's also important to think whether you do it alone or you do it with partners, whether you joint venture. And I think it's, for us that have got the scars and the gray hairs to show things that have worked and have not worked, it's very important to have on the ground local talent and people on the ground in all the places you operate. But coming back to us, I think through the cycle view, a 10, 20-year view, is we have already got a business that's fairly diversified from a currency perspective. We also now diversifying from an operational perspective and a product perspective. So we will continue to actually allocate capital to our businesses outside of the African continent. That doesn't mean we're not committed to South Africa or we're not committed to Africa. In fact, we are still committing and also putting in capital into countries across the continent. But in the 10, 15-year horizon, we will continue to expand outside of Africa. And we've selected certain core mining and agriculture markets. We've thought about how we go into those markets. We've thought about what capability and products we take into those markets. In some instances, they're not the capabilities and products that we're very strong at in the local market. So to give you an example of that, our UMates business in Australia, a fantastic facility there. We develop a coatings product. That coatings product, Ferticoat, is then taken into a large market in India, so the entire Indian market. And we do that via a joint venture partner in India, Deepak Fertilizer. It's really great to be working with them for so many years, working the two businesses, bringing their IP together, launching a NPK coated product into that market. So that what it does is it provides the local business with a additional product, and it provides us with access into these large agriculture markets. The Brazilian and Indian market, agriculture market, is multiples the size of South Africa.
So you are then talking about, you're telling us the story. You still haven't quite told me what the portfolio then looks like from a revenue perspective. So I wonder if you could, without obviously breaching any JC regulations, because we're not talking about earnings forecast for next year, we're talking about what success looks like in 10 years' time. What does Omnia look like? Is it a 30% South African business and a 70% international business, for example?
Yeah. So Morris, I mean, you said something earlier around Oro Agri, and maybe, to simplify it, our portfolio still needs to be streamlined a little bit. So most family-owned startup businesses acquired everything. So to give you an example, we own 160 rail wagons. We own lots of land, lots of warehouses. If there's anything we wanted as a business, we bought it. So we own it. And I think, as you can see, times have changed, that if you're not a specialist in what you do, it's better to outsource that. And there's a number of great companies that are more specialized in owning various assets. So I think our portfolio still has some streamlining in it. But if I look out in the 10 or 15 years, assuming we've done all the streamlining, our focus will be agriculture and mining. Our focus and our core competencies in those areas might lead us to other parts of those value chains, to other parts of those supply chains, which could perhaps be a third revenue generator for us. And in our strategy documents, we start talking about what that can be. In our integrated report as well, we start talking about what that can be. But we will not rush into those areas. We've got a lot of value to generate for our shareholders out of agriculture and mining. If we were to just dream for a second and say, where would Omnia be in 10 or 15 years' time? I think we would have a much larger international business. I think we would have a stronger foothold on the African continent. We will play a bigger role in food production and mining across the continent. Percentages, it would be great if 70% of our business is generated in the new markets we're entering currently. But having said that, I still believe in the long term, Africa has got a huge amount of potential. I still believe South Africa has a huge amount of potential. And I think we must look through the cycle. I think we must give our people hope. We must give our people stability, and we must help improve the fundamentals in the African continent. The African continent has a lot of people that need to be fed and that need livelihood. So I would be happy with a 70-30. I would be happy with even greater than that. But I can tell you that we've got so many great people on the African continent. They will be growing our African business probably as fast as we're growing our international business. So that that also then results in us having to think about doing something maybe more substantially globally in the coming decade.
Then talking then about your two growth engines being agriculture and mining, where does that leave your chemicals business?
So, I've said that our chemicals business is a little less core, and I've created what we can call an investments cluster, which has Protea and a Mongo in there. Both businesses have got incredible leadership teams, very focused, extremely resilient through the pandemic. So, I think, our strategy at the moment is to get those businesses to deliver return on capital, to grow them in South Africa, SADC, and a little bit wider in East Africa at the moment. And I think that will provide our shareholders good returns in the medium term. In the long term, we will be investing in our agriculture and mining business. So those two businesses, we will not necessarily integrate them as deep into our group as the agriculture and mining one is, because the agriculture and mining one is integrated from a supply chain and value chain perspective. It's always important, when you've got these businesses, to make sure you've got the right leaders, the right management teams. And I think I'm confident that in our chemicals business, we've got the right teams to actually get those businesses to the correct return on capital that we want going forward. There's still a lot of value we can generate out of them.
So Ketso is interested maybe in seeding another sector, and they are interested to know in terms of innovation and looking forward, both in agriculture and mining. Are you also looking at renewable energy?
So we've, firstly, we will see businesses, and we are seeing businesses, innovation businesses in agriculture and mining. So if you've got any of those, come chat to us about it. As far as renewable energy is concerned, our supply chain is incredibly deep and wide. We've got probably a 20 billion rand worth of supply chain, whether that's transport, water, energy. We use steam. We generate our own energy out of our plants, and we have renewable energy in a number of our plants across the world. So yes, we are investing in solar. We are doing a number of solar projects. However, and yes, we've got some fantastic engineers. So our engineers can build a solar farm from scratch, and we actually are building one now in our Sasolburg facility. But we haven't at this stage thought about seeding, a pure investment in the solar space. All we're doing in energy, solar, water, renewables are actually projects for ourselves, projects that actually fit into our supply chain and actually enhance our returns. We're not doing that for third-party customers at this point.
Thank you. So you've spoken a little bit about your strategy. I would like you to take us maybe more operationally into your strategy around what does this renewal mean in terms of the next phase, now that you have successfully delivered on the stabilize and fixed phase. Just help us to understand in strategic language, what does this look like, this renewal in the short to medium term?
Yeah, I think, Maurice, there'll be very few CEOs who do a turnaround that don't talk about a fix. something and a grow. So often, and those words change. So, you know, everyone uses some word. And I guess, you know, if you say we had a theme, which was fix and stabilize, and ultimately in the long term, we want to go to grow. And the question is, can you fix and stabilize and then move straight to growth? And, you know, when as a team, we were discussing that, we felt, well, actually, there's something in between. There's something, and you can call it reset, you can call it renew, you can call it re-energize, you can call it whatever you want. And I think the world actually is going to go through that post the pandemic. The world has been, you know, we've been so shocked with what's happened in the pandemic, and we all want to just come out of it. But sadly, we're going to have to force ourselves to say there's a phase in between where we just have to change a few things. And I guess from a business perspective, you know, assuming the fix and stabilizing is done, what we're really clear about is when you build and when you grow, and that is exiting and, you know, acquiring businesses, you have to have a very solid base. And that's the phase we're in now. And I think, you know, for probably 12 to 18 months, we will continue to invest. You know, we'll continue to make a whole lot of strategic decisions. But right now, we're focusing a little bit what you're calling the insides of our business. You know, let's focus on our people. You know, let's put more robust processes in. Let's have our people share in the value that the organization has created. You know, let's consider making all of our people shareholders. You know, let's think about our talent. Let's think about complementary folk from inside and outside that lead our businesses going forward. And that's the reset and renew that's happening. You know, if I were to paraphrase what you've said, a business that is very disciplined about capital allocation will be prepared to make tough decisions to disallocate capital. So Oro Agri, and I remember a financial article written about selling it. You know, Oro Agri was this beautiful bride, and it's very difficult for our people to see us sell the bride. You know, sell or not, and that's not a good analogy. But
yeah,
sell the business
after,
you know, after buying it. So what we're doing now is actually, you know, resetting, renewing, thinking about whether there's certain capabilities we need to build or buy from a tech perspective, and really ground that foundation. So, you know, as the company moves, Omnia is not moving forward for the next 2 years, 5 years, or 10 years. Omnia needs to move forward for the next 50 years. So, you know, that means we have to be very deliberate about our people, our culture, our talent, our operations, our safety. And it's been a fascinating journey that we're going through now. And while we're doing that, we're still building, you know, we're still acquiring, we're still disinvesting. So that's what I refer to as a renewal or a reset. You know, there's a lot of books that talk about different versions of that. A lot of it is culture, brand, you know, get rid of some of the holy cows maybe, and strengthen some of the muscles around forecasting, predictions, macro factors.
So talking about taking care of the basics, Cree Govender wants to know, can you share with us your digital transformation agenda? By the way, we've got 6 minutes, and I've got another question to come to, maybe 3 to 5 top initiatives.
Yeah, so, you know, because we're not a financial services business, you know, our digital agenda is focused in agriculture and mining. So, you know, if you want, and we probably need to get into a little bit of detail around our blasting software, our apps, and our technology in that space. And similarly, and I don't want to take you there now, Morris, but our self-drive tractors in agriculture. And maybe when you've got nothing to do, we can send you in one of the tractors that will drive you around by itself and see how that works.
I remember I've been in an open cast mine, and I was this small relative to this big a wheel of a truck. So I love those kinds of immersion. So I'm going to take you up on that, Seelan.
Yeah. So from a digital perspective, I guess our focus is really in agriculture and mining. And, you know, if I were to talk about our business itself, you know, our ERP systems, our supply chain, there's some investment in that space. You and there's various initiatives there. So it would take me a little bit of time to go into that. If we look at our website, you'll see what we've done from a technology perspective in those sectors. I think that's where we will invest. So in agri-tech and mining tech, and both the ag tech and mining tech sectors globally, you will see are actually outperforming the traditional explosives and the traditional fertilizer businesses.
So
we've just launched
continue to focus on your precision mining and in precision agriculture.
Agreed.
Using the digital story to enable that.
Yes,
on top of the scientific story that underpins
yes. And let's not forget the ESG part of this. So our emulsion that we use, the emulsion is the liquid in the explosive. So you drill a hole in the ground, you put the emulsion in. Our emulsion is made with used oil. So we actually get the used oil from various industries and mines. We process that. So our emulsion, if you look at it, it's actually dark. It's actually a brown, almost black type emulsion. Whereas if you use clean oil, it will be a different color. So, each of these technologies we do, we focus on safety, we focus on ESG, and we focus on, enhanced yield or enhanced precision for our customers. So it's done on a very integrated basis.
And then we've got Lwandile, who's the last one. Lwando, sorry, says, good morning. I would like to know whether Omnia is involved in any enterprise development or procurement initiatives for SMEs. I'd suppose the answer is yes, given that you are B level 2. So I would imagine you would have scored very highly there. But maybe give 1 or 2 examples for Lwando.
Yeah, so, obviously there's various initiatives we've got, in terms of how we pay, in terms of how we procure, in terms of support, learning, development, CSI initiatives. But I guess, have a look at our website. You can speak to our different procurement folk in Protea or Omnia Fertilizer or BME, and there are various opportunities there. Having said that, our business is fairly specialized, so safety is really important to us, and we work with fairly hazardous chemicals and processes. So from that perspective, there's certain things that it's very easy to bring additional folk into our supply chain, but in certain areas it's very complex. Our business is very specialized in terms of some of our processes and what we do.
So Seelan, last question for me, maybe it's a personal reflection. Your journey into this amazing business was idiosyncratic, as you say, non-executive director, then thrown into an FD role, then thrown into the CEE role. And for this year, it's the first time you get a chance to kind of pause. You have a new FD at Omnia. If you just talk to leaders in general and talk about your life story at Old Mutual, your life story at Stanlib, your life story at Liberty, and more recently, your life story at Omnia. What are the 1 or 2 things that you've learned that are really crucial in leading an emerging market multinational corporation?
Yeah, sure. That's a big question, Morris. I think I've obviously grown up in financial services, and I think financial services has got some really great attributes. There's a lot of learning that I've achieved. I've been really blessed to work in some great organizations. They send you all around the world to learn, to experience. And I think what drives me is really making a difference and an impact. And I believe making a difference and an impact is making a difference and an impact in people's lives. So, when I joined the board of Omnia, I wanted to learn about chemicals and learn about manufacturing. And when I saw this great company in troubled waters, I could not stand by and watch that. I wanted the people of Omnia, the customers, the suppliers, to actually have a company that will succeed and will continue. A lot of companies that face this sort of distress, does not come through it. And that's when I fundamentally believe it was the right thing to throw my shoulder to the wheel and actually make a difference in Omnia. In terms of that difference, I think business is fundamentally about people. Your customers are people, your suppliers are people, your staff are people, your stakeholders are people. And actually, ultimately, you want to do good business. You know, if you do good business, ethical business, you build long-term relationships, you do what's right for your people, your customers, your suppliers, your stakeholders, your communities, governments, revenue authorities, the entire circle, actually your business will be successful. And often those things get a little bit out of sync. I think it would be folly to think that it's always perfect. You know, sometimes it gets out of sync. And if you take a 20, 30-year horizon, you see businesses that go up and down. And sometimes, you know, the shareholder maybe gets a little bit too little or a little bit too much, and the staff get a little bit too little, or things get a little bit out of sync with customers. But I think ultimately, if you can get that wheel to work, that all stakeholders actually come together, you start doing really good business. And I think that's what drives me. What drives me is to be close to our people, to be close to our customers, to be close to our suppliers and all our stakeholders, and actually ensure fairness between that wheel. Leadership, you know, whether you are in financial services, whether you are in manufacturing, whether you are in retail, there's clearly a lot of hard work of getting into the detail of those businesses and understanding it. You know, you can't really invest in a business if you don't understand it. But ultimately, the business is about people. You know, so if you've got a basic understanding of finance, a basic understanding of all the concepts, you know, prepare to roll your sleeves up and get into and learn and understand. You know, the focus on people, I think ultimately will create success. I learned that at a very young age, you know, from my father at the time, you know, that actually doing what's right for people overall. And often, you know, someone will say, geez, this is not perfect. I want a little bit more, or I want this differently, or I want that. But in the circle of life, I guess ultimately it's all about people. And that's been the most fascinating journey for me. I still, I absolutely love Omnia, and I enjoy what I'm doing. I've enjoyed my time at Old Mutual, at Liberty, and at Stanlib, and I miss financial services dearly. All the various sectors, I think, in our markets have got a big role to play. You know, financial services have a big role to play. So do you know, the other businesses. So I'm really pleased with what we've been able to achieve, but I think ultimately it's all about people.
So let me lean into two concepts. First, it's Karen Fenner, who says, Mr. Gobalsamy, very inspiring, listening to you, many thanks. And then, of course, in your own words of your organization, protecting life, sustaining livelihoods, creating a better world. It really comes through in the humble way, in the thoughtful way that you've engaged with us this morning. Seelan, thank you so much. Look forward to watching your success and supporting you from the sideline. Thank you, thank you, thank you.
Morris, thank you very much. And thank you to all your listeners as well. Really appreciate it.